Hi guys, welcome to the Thinking Crypto channel where we are closely approaching 40,000 subscribers. We cover the crypto news and interview many of the folks who are building and investing in the crypto asset class. I've interviewed CZ, Binance's CEO, the Winklevoss twins, one of the co-founders of Tezos, Andreas Antonopoulos, and more. So please hit that subscribe button if you're new here, as well as the thumbs up button. Guys, I want to take a look at Bitcoin's stock-to-flow model, supply and demand economics behind Bitcoin since its inception. Obviously, it's a deflationary currency, and that has helped grow its value. It helped increase the price over the years since its inception. And this was created by, or I should say, very much highlighted by Plan B, who this person chooses to remain a bit anonymous, but has been interviewed over audio. Anthony Pompliano interviewed this person. They have a website. They've been in the market for a long time and have put out a lot of data about the supply and demand economics around Bitcoin. So where are we at right now as far as stock to flow? We are at the red dot phase. So you may say, what the hell is a red dot phase, right? What is going on? Well, if you look at the data and trends here, not our emotions now, but over time, after the halving, you have a cut in the supply of Bitcoin, right? The halving cuts it in half. And then you have the growing demand. First, it was from retail investors. Now it's from institutional investors. And we see that it has led to increased prices over the years. You look at 2013, you look at 2017, and now in 2020, we got our first red dot here indicating that phase of the supply being low and then that demand is increasing, guys. And we're seeing demand now from institutional players, right? It's not just retail. You look at Grayscale, they bought 1.5 times as much Bitcoin that was mined since the halving, approximately 18,910 Bitcoins. I mean, wow, right? And then you heard about Paul Tudor Jones, and this was very much publicized, saying that he's putting 2% of his assets in Bitcoin. So you have the institutional demand, coming from pension funds, hedge funds, all these folks are getting in, and once again that supply is being cut and it's getting pretty scarce. So the question here, red dot starts bull market again. I personally believe so. I've been on record saying I think late next year we're going to see a parabolic run up again with all-time new highs. The key factor that many people and a lot of retail investors don't grasp is market cycles. They don't understand bull bear accumulation phases and that these things can take years. They get tired. They want money fast. The things that smart money has been able to get over the average Joe over the years is they're able to be patient. And like I said, if you take your emotions out of it, right? No emotions, you look at the data and trends, it's pretty clear. Now, obviously, this is not financial investment advice, but it's based on trends, on facts. Market cycles exist in real estate, stock market, and many other asset classes. So you got to keep that in mind. And when you understand these things, unless you're day trading, you're not worried about weekly and monthly charts and spikes and daily crap. Like, everybody starts paying, oh no, the price went down today. Who cares? I want to see when we get to, according to the stock to flow model, according to the bull, bear, and accumulation phases, what are we headed to, right? The potential higher prices and going through those respective cycles. So that's just my take. Like I said, if you're day trading, sure, that you may be worried about that, but that doesn't faze me. I'm hodling, I'm accumulating in the dips, and I'm paying attention to data, not emotions, not what people are tweeting. Now, sure, people can tweet factual things, but sometimes people get caught up. Oh no, we just had a dump. Oh no, this. And then you see all these big headlines on YouTubers do it too, right? A lot of the guys who day trade, and I think they play on people's emotions like that. You cannot put your emotions into this, guys. You're going to get wrecked. You're going to get discouraged. But look at the data. I hope you see what I'm trying to say here, and the data does not lie. So I believe with that red dot, that indicates we are at the start of another bull market again. But keep in mind, some people are going to come back a month later and say, hey, Bitcoin went back to 9,000. You said we were in a bull market. Yeah, you're not looking macro level. You're looking to micro. You're looking at the weekly. Zoom out. Remember what happened in 2017, and I went through that myself because I got into the market in 2016. Guess what? Bitcoin hit 20,000 after the halving in 2016. It took over a year to hit to 20,000. So got to keep that in mind. But like I said, supply and demand economics, big money is accumulating. We see it in headlines here. We see, the movement. We hear about the hedge funds starting up globally. Just yesterday, not yesterday, but just recently, I told you guys about the new Hong Kong crypto hedge fund investing in Bitcoin. So they are buying up. The demand is here. And with the world we live in today, guys, with a lot of money printing, recession, pandemic, protests, unrest, all these things happening, riots. A lot of people are going to move more towards Bitcoin, digital, global. I don't need to be holding a bar of gold or something at home, things like that. Not saying gold is not one of those hedge assets. It is, but I would prefer Bitcoin just given the ability to move with it. Someone can't really steal it from you, right? And obviously, it can sell at a click of a button. I can buy at a click of a button. I can send money to people around the globe very easily. So just keep that in mind. And which exchange has the most Bitcoin? Well, this is not really surprising. Coinbase is the largest Bitcoin holder among exchanges, followed by Huobi and Binance. So like I said, not a big surprise here. These exchanges are pretty big. I would have thought Binance, though, as number one, but surprisingly Coinbase. So cryptocurrency exchanges hold around 3.08 million Bitcoins on their customers' behalf, nearly 16.5% of the total supply of 21 million, according to research conducted by the Block's Larry Cermak. While the absolute amount looks large, the percentage figure is down by 10% since February, when 9 exchanges held around 3.43 million Bitcoins, representing nearly 19% of the supply. Notably, Coinbase is the largest Bitcoin holder, having around 984,300 Bitcoin in its wallets. Coinbase is followed by Huobi with 413,000 Bitcoin, Binance 318,000 Bitcoin, OKEX 268,000 Bitcoin, and BitMEX with 217,000 Bitcoin. Wow, I wish I had one of those wallets, guys. I think all of us do as well. But as always, you can leave a little bit of crypto on certain exchanges, not all. Like, I trust Coinbase and Binance. If you're trading, you want to do some swing trading and so forth, don't leave all your crypto on an exchange. Get it on a Ledger Nano X or a Trezor or something like that. I personally keep my crypto on a Ledger Nano X. So interesting data here, guys, and we're going to see this grow, as more people start getting into the market. Nevertheless, just interesting data here. And, I love seeing news like this too. It's not as sexy as price movements. And I know the big headlines of people saying, oh, Bitcoin to 10,000, all that. But this is so critical for the growth and the maturation of the market and to see higher prices. Swiss regulators greenlight crypto transactions for local banks, stock exchanges, corporates. They're all going to be involved, guys. InCore Bank becomes the first Swiss business-to-business bank approved by the financial watchdog to operate with digital assets. The Swiss Financial Market Supervisory Authority, or FINMA, has authorized InCore Bank to carry out digital asset transactions, allowing customers worldwide to access and transact within the bank. The official announcement represents an important step in creating a blockchain-friendly environment across the EU banking sector. And, you're going to see maybe the Swiss start with it, and then there's another bank going to pop up, and then you have the big banks get involved. So only a matter of time, guys. Be patient. Don't operate by emotions. Study the data, study the trends, and follow what's happening, as far as adoption, who's getting involved. And we're seeing all signs point to growth, maturation, and higher prices will follow. You just got to be patient, go through the cycles. Guys, what do you think about this? Leave your thoughts and comments below. Thumbs up if you like this video, and I'll talk to you all later.